Summit Educational Series. First, I want to thank our sponsors, Nuvei and payment provider for the world's largest and leading brands, who compliantly assisting companies today for private companies with their payment rail options, and to KoreConX, all-in-one technology provider for Reg CF, Reg A's, and Reg D offerings. Now, today's topic is navigating crowdfunding from pre-raise, during the raise, and post-raise. And what are the requirements around that? We're waiting on a couple of our other panelists here, but we're going to jump in respect to our audience. So first, I'd like to introduce two of our panelists from Digital Niche Agency, CEO Jason Fishman, leading investor acquisition firm, providing us with extensive marketing experience. Jason, we've known each other for a while, you've worked on hundreds of crowdfunding campaigns. So welcome to today's panel. And first-time panelists, I'm excited to have Jagger Lucé from Valiant Digital, a full-service marketing agency, and we're going to dive into what that looks like, with companies trying to raise capital as well. So we're waiting on a broker-dealer, so I'm going to kind of take the reins here and jump right in. And let's start with some basics before we get into the details of what goes on the marketing front of a raise. So the basics: we have Reg CFs, we have Reg A's and Reg D's. They're crowdfunding exemptions, which allow for general solicitation to the public at large. So anybody can invest in these. And the whole concept of democratization of capital is becoming really, really mainstream. For those of you that may not be familiar with some of the exemptions, Reg CF, I can raise up to $5 million in a 12-month period. Under a Reg A offering, Reg A Plus, I can raise up to $75 million. And a Reg D, I can raise up to limited amounts of money during my raise. Now, they all have different restrictions, both from a marketing perspective and requirements from a filing perspective. So let's start with, first off, look at a Reg C, okay? Since, again, we don't have any lawyers on the panel right now, I'm going to not overstep my legal skis, but I'll give you, hopefully, a really good overview. So in a Reg CF, it gives you the ability to do what's called to do a filing, but it's not regulated in the same sense of a Reg A. The filing is, I do a filing requirement. It generally takes about 30 to 40 days. And it's not what we call a qualified offering. Qualified offering, it gets vetted by the SEC, and that's a more sophisticated offering in the form of a Reg A. So a CF, it's fairly simple from a paperwork. It allows small companies, or any company for that matter, it could be large as well, and I'll have our marketing guys share their experiences on the types of companies. Reg CF, you need a CPA audited financials, GAAP financials, if you're going to do up to $5 million. If you're going to do under $1,070,000, you just need CPA reviewed documentation. And it's important to note that companies who do a Reg CF and a Reg A, the holders may be treated differently, and we're going to talk about that later, when they make that initial investment. And that's that ability to transfer and trade shares. So for the most part, hey, I've got these exemptions, I can raise X out of money, and I got a lot of paperwork that I have to deal with. Now, it takes a team of service providers from legal, broker-dealers, technology platforms, and probably, to my mind, marketing firms are the most important, to be honest with you. I'd like to think my world and the tech world is the most important, but the marketing firms are going to help you raise your capital. So under a Reg A, companies conduct through one of two ways, and the guys have experience in both. So one, you can have a Reg CF. I apologize here. So in a Reg CF, companies can have raise capital on a registered intermediary, being a funding platform where there's lots of offerings, or they can raise funds through a registered broker-dealer on their own offering page. And we're going to dive into what that really means. So when I say my own offering page, I'm standalone, and I can do my Reg CF for up to $5 million, and the marketing folks are going to help drive the traffic there. So from a pre-raise perspective, let's kind of jump in with our panel here, and let's talk first about pre-raise. I want to raise money on a Reg CF. I'll jump over to you first, Jason. From a marketing, what do I need to do to prepare? And what's the dialogue or the questions you have with a potential issuer?
Sure. And thanks for that overview to kick things off here, Peter. As Peter mentioned, we've worked on over 350 of these deals that have collectively produced 9 figures of capital, primarily through content marketing, advertising, and outreach. So I want to have an understanding of what that brand is currently doing for content marketing, advertising, and outreach. Audience size is a indicator for us for how much traffic, how many investments could occur in the early stages of the round. Going to get into pre a bit, or we're pre right now, the discussions before a pre-launch marketing campaign. If an issuer has over 100,000 followers, email recipients, audience in any way, shape, or form that they can touch during the campaign, that is a massive head start. If they have under 1,000, perhaps we're spending some time during the pre to build that audience out further. I know we don't have legal on this call, but you want to make sure that's done compliantly. Priming, mentioning the deal, all of these things are what you're going to want to look at with your legal counsel to make sure you're doing this correctly. But if you're taking 2 months, 6 months, we've seen deals that took 1.5 years to get through the filing, get through the entire setup. You can be actively audience building during that period of time, whether it's on social media, running advertising towards an email list, finding individuals who have an affinity for your product, for your industry, that later may be interested if an opportunity becomes available for them to take an interest position in your organization. So we're asking questions about their audience. We're asking questions about what makes them different. We're asking questions about why audiences are going to invest, what the interest is actually going to be about, and hopefully going through a well-crafted pitch deck that could be converted to an offering page. During the pre-launch marketing itself, as discussed, we want to audience build. Once you're in an official test the water stage, want to test some different messaging, see what audiences, messaging, funnels are converting best that can be taken to the live campaign. I like making analogies, one of them with reward crowdfunding and agencies in the reward crowdfunding space that are prepping to launch an Indiegogo or Kickstarter generally do not take a campaign live until it has 10,000 or more email signups. That way,
Okay.
100 or more conversions in the first day. Reward crowdfund's much shorter, about 30 days. So that first day is crucial. If you don't hit a third of your goal, 70% chance you won't hit your full goal. With equity crowdfunding, you do have a longer time period, and there are clear distinctions between the two, but similar fundamentals, and that's what a pre-launch could consist of for a Reg CF.
Okay, so I'm hearing that if you can build an audience, it certainly makes your journey. You've got an affinity, you've got a brand, you've got a product, you've got a service. Jagger, what's your take on how do you look at it when somebody, let's say I don't have an audience, but I got a great idea. What goes on in the conversation with an issuer when it says, how do you approach it even? Like to say, do you find them an audience? Do you build in an audience? What does that even mean?
Yeah. And so really where we start in that dialogue with the issuer to really capture what messaging they're going to want us to be communicating to these potential investors is really to extract from them anything that they feel like differentiates themselves from everybody else operating within that same industry. It sounds cliche to extract that from them. Of course, we're going to be extracting differentiating factors, but that is what is most important. What's different about your service? What's different about your offering, your company, whatever you're presenting to the market? Because our job as a marketing agency is to be the issuer's voice and ultimately to speak on their behalf, highlight those things to the correct individuals. And so we're going to be extracting anything from these issuers that we're able to utilize to develop trust and credibility in the founding team and in their history and in their track record of success. Then we're able to put our marketing spin on it, obviously within compliance, and then push it to those individuals. And kind of to piggyback off of what Jason was highlighting, pre-raise, it's that development of that crowd, for lack of better terminology, development of that first party data or data that those companies are able to utilize that they own outright to develop that anticipation, that excitement aspect within those potential investors.
Well, thanks for that. You said the data that they own outright, and it brings up a thought of mine to the conversation that says, what does that even mean? Okay, because I get a lot of issuers that go, hey, can you give me 1 million users or 1,000 investors? And I said, I can give you lots of people. I can expose you to people that, or to marketing firms like yourselves that may have lists or databases. It doesn't mean you're going to invest in that. What's your guys' take on that when people approach you with that and say, I just want the investors, but it sounds like they got to do a little bit of, they got to get trust and have to do some heavy lifting and work first.
Absolutely. I mean, you can lead the horse to the water, but you can't make it drink, right? And that's part of our job, is not only finding the investors, but also helping nurture that initial interaction in conversation and messaging with that investor to be able to toss off and kind of hand them off to our client's team for them to be able to answer the sophisticated and detailed questions. So that first interaction, those first few interactions are integral, and being able to capture their attention, bring them to the table, and ultimately try and get them closed out for an investment.
So on the pre-raise, do you guys do some sort of almost, it sounds like you're doing a bit of a marketing audit on the issuer to see what's their preparedness to go forward? Jason, maybe, are there issuers you say, hey, you're just not ready for this, or maybe they're not a good fit? Or do you show them the path, or what's your experience in that, or what
Sure.
are some takeaways?
Sure. And the stages I break down, similar to your pre-post, during, we work with groups that are in planning, we work with groups that are plateaued, we work with groups that are scaling. And those conversations can look a bit different. They're usually from our referral partner. So an introduction from a lawyer, someone on the finance side in the space. So we hop on the calls to be educational and give different ideas. I do like to address obstacles and point out metrics. I go on a King's Crowd every Monday and I do an analysis on their Saturday report and talk about what's occurring in the space. Any given month, the top 10% of campaigns are really moving. The bottom 50%. 50 are pretty stagnant, not raising much at all. I address these obstacles and point at marketing as the access to be able to get the traffic, to be able to get enough eyeballs, regardless of that audience size. The audience, as mentioned, is important, but we've seen groups that have had little to no audience out of the gate, build up enough investments early on to be able to point at and show validation, to be able to get writers, publishers, financial email newsletters to talk about them over time. And I believe it's very much the momentum that becomes attractive on a Reg CF deal. So as a prospective investor, if you get to an offering page and there's 60K raised one day, and then a few days later 120K, and the next time you're there, it's 180 and 250 and 350, 500, 700. You're beginning to feel that, I call it a line around the block, those investors stacking up. And the contrast to an empty restaurant sensation and that feeling of, hey, every time I get here, there's nothing new. They're not reporting how much is raised, or they are. But it's not moving at all whatsoever. So being able to craft the narrative that gets those audiences excited and showing social proof and third-party validation to establish trust and stimulate action is what I look at as key. And Peter, you made a joke there of the issuers that say, hey, we just want investments. We just want a return, which is always funny to me. I'll hop on the phone with the founder and they're like, no. I mean, we're not interested in clicks. We're not interested in impressions. We just want conversions. We just want a return on ad spend. Well, that's pretty much what everybody wants. And it shows you're looking to cut some corners, miss some steps. Why does marketing fail when I'm looking at a campaign for the first time and trying to understand, where they're at and why they're not at a higher level of raise. Usually a lack of planning during the pre, build out a full marketing strategy, an algorithm map, if you will, of exactly how you're going to get to each milestone. Really picture 50,000 visitors per every $1 million raised on a Reg CF based on a 2% conversion rate. So 1,000 investors off 50,000 visitors and $1,000 average investment value. Maybe that's 2.2 million on a Reg A plus and a $2,200 average investment value. But actually having that all put, pen to paper during the early stages is a big deal. Determining where you're going to get the budgets for to buy that traffic via advertising or get it through organic means, coverage, financial email newsletters. I mentioned a few different ideas that could come to play there, but definitely whether you're doing any pre-launch marketing or not, build out that full strategy and figure out, based on what's happening in the space today, what's realistic for your brand and your raise.
So what I'm hearing is a couple of key points. A lot of it's common sense in a sense. One is trust. And Jagger, you made a comment on I got to trust what you're doing. And I mean, I look at it and I make an analogous sometimes personally to, like, if I'm in the world of e-commerce and I brought out a new pair of shoes and I've seen stuff, I'm shopping, I go, hey, I like those. I don't make that purchasing decision out of the gate. Well, anytime you're asking people to part with their money, what's in it for them? Is it an emotional connection? Is it a financial reward connection? Sometimes it's a combination thereof. You're doing good. Maybe you're in the med tech space and you're looking for breakthrough. And the nice thing is in the crowdfunding, I can participate in something I believe in, but I got to believe in it first. And often that'll take multiple touch points. My analogy to e-commerce and the shoes is I might have saw that shoe ad 10, 20 times. And eventually I go and I'm reading reviews and I'm checking at it. It's no different do you think? And when you're talking a financial investment in a company, I'm putting my hard-earned dollars into something that I can believe in. So I think what you guys are saying, the trust is absolutely critical. I've seen raises, and I want you guys' feedback on this, where I have two companies. They're both in the vodka business, for example, and I'm looking at vodka A company is successful, vodka B company is not successful. So why does that occur? It's not. They're both similar products. I guess it's like anything, any business that we're entertaining. Somebody's executing, somebody's not. What would you guys say to an issuer at the pre-raise stage if they're in a space that might be more challenging or highly competitive to stand out from the crowd? What are some of the things that you're doing, Jagger, that might be, I guess, maybe unique?
Yeah. And that's a challenge that groups oftentimes don't anticipate. They think that they're going to be able to just slot together a crowdfunding raise, get their Form C, and put it up on a market, and $5 million is just going to show up in their bank account. And so identifying why that doesn't occur in certain groups then allows you to mitigate that for groups moving forward. One of the things that some of our clients have been utilizing is benefits for investors that invest a certain amount. So for instance, if they invest, call it 50,000 rather than a small check of 5,000 into the crowdfunding raise, then that investor would then get invited to an all-inclusive event in New York, an investor summit, stay is included, flights are included, things like that. Or I've even seen things where they'll send, for example, a couple of their vodkas to an investor that invests a certain amount. So giving kind of a benefit, an immediate tangible benefit other than just shares in the company, other than just debt or equity, right? Giving that aspect of satisfaction in an immediate return for something that they just invested into, even though it's not necessarily an immediate monetary return.
You brought up a super key point, is one, understanding what the regulations afford. And from a legal perspective, the nice thing is I can incentivize my investors, both a Reg CF and a Reg A offering. Right. And companies can get extremely creative. Maybe it's a fear of missing out because this incentive has a time constraint. Maybe it's a product offering. Maybe it's a feel good. I've seen things from, hey, you can get a trip to the factory that we're building because we're doing this new thing. You can participate in an event. You might get, as you say, you might get product, or you might get discounts, or you might get bonus shares, you might get warrants. what are you finding, Jason, that you found that with any unique ones that you say, or maybe not unique, but you say these tend to work well?
Celebrities, athletes, being able to have dinners, as Jagger mentioned, those are awesome ideas. I love how the flight, everything's included in there. We've seen those get people from more of a average investment to a 10K, 25K, higher level transaction. So I think those are awesome. Basically, Peter, things money can't buy. If there is an experience, if there is some type of inclusion into the board, into discussions, into just overall communication with team members that are in upper management, we've seen that go a long way.
Then the obvious one, this is more on the real estate side. Well, not just real estate, any operating companies. Dividends. We've seen dividends pay big. It's easy for somebody to understand, and they may incentivize those investors with dividends based on the operating side of the company on a 6 month or annual basis or monthly basis. But the key in that arena is you still have to convince those. You might be a real estate developer, and you still have to convince that audience that you're going to execute on your plan. Once you execute on your plan, it's easy to have that snowball effect. So what I'm hearing a little bit here is in your planning discussion is to say, again, what's motivational to that investor and that emotional connection. Sometimes it's a dividend. That's an easy one to understand because there's dollars in my pocket. But until you execute, I'm not going to jump on board, right? So you've got to prove it. And that's where constant marketing to reaffirm whatever your value proposition to invest in your firm might be is absolutely critical. I got a question over here that just came up. We'll jump in, and with the question is, can an issuer do a Reg CF and a Reg D 506C simultaneously? Well, we see it a lot. Jason, Jagger, what's your experience with that, and what are the unique flavors and when and why? Because a Reg CF, I can do a Reg CF and I can have accredited and non-accredited. So why would I do a 506C as a sidecar with my Reg CF?
Yeah, you can absolutely do a side-by-side. This is not legal advice. I can hear my general counsel yelling at me from the background, but this is an easy one. Yes, you can speak to your legal counsel about what a side-by-side Reg D and Reg CF look like. We've worked on campaigns that drive audiences to a master landing page that then has the audience indicate whether they are an accredited investor or retail. Verbiage can change around that, but then taking the audience to the appropriate funnel from there. Also with ad targeting, there's various types of household income and net worth targeting that we can do to be accredited investor focused. There are also databases we have access to, databases that we've built and owned that we can use for ad targeting to be more specific around Reg D. I would say Reg D marketing is more of a lead generation, lead nurturing exercise, often with an offline component, whether that's a call, a meeting, in person. Where Reg CF, you're looking for more of that transaction directly on the offering page. Again, $1,000 average investment, hundreds, thousands of investors. So looking to have more of an e-commerce activity of the shares taking place.
In my experience with running them simultaneously, it seems like kind of the Reg CF, on the Reg CF side of things, it oftentimes attracts more of that low-hanging fruit, the individuals that are going to be cutting the $500, $1,500 smaller checks. And then, like Jason said, for the Reg D-centric kind of accredited investors, oftentimes they want to get on the phone. They want to talk to the founders. They want to talk to the investor relations team. They want to have those sophisticated conversations because with those Reg Ds, typically the check sizes are much bigger. I mean, with our clients, we're seeing 100,000, 250,000, multiple six-figure checks that are coming in with those Reg Ds. And odds are you're not going to go to a crowdfunding page and say, I like this deal. I like this company. I'm going to just check out for $250,000 without talking to anybody. So it gives you the benefit of both. You can have the low-hanging fruit with the Reg CF, and you can have the bigger guys coming in with the Reg Ds that you can offer pref terms to and really kind of develop more of a closer, intimate relationship.
And I think you hit it when you said pref terms. Okay, if I'm going to put $100,000 in on any of the regulations, I can incentivize those investors with various thresholds of investment that I might get more favorable terms. I might get some sort of preference. Maybe I have voting shares, non-voting. Maybe I have warrants. Whatever that might be, the amounts can vary. So traditionally, you guys can tell me, and again, none of us are going to overstep our legal skis. Our legal broker dealer were unable to show up today. So, but traditionally, your Reg D offering and your Reg C offering, they're going to differ. They're going to differ slightly. Your minimum investment on your Reg D. The beautiful thing about a Reg CF and a Reg A offering is I can have anybody can participate based on certain thresholds. So we're going to dovetail into what that looks like. So we hear this term accredited investor. We hear this term non-accredited investor. So for the audience and for everybody here, my ability to invest and my suitability, which becomes critical, is going to be based on two things. It's going to be based on my annual income and my annual net worth. And technology platform providers, they make it really easy in the sense that it does the calculations for you. If I tell you I make $50,000 in a Reg CF, it's going to say, Peter, you can invest this amount of money. It's to protect the investor and the issuer and to be transparent with all the participants. So that's also another reason why you have different thresholds and perks for investors. But I want to be inclusive. So for example, you mentioned a Reg D, say my minimum might be $100,000, and we see that, or $25,000. On a Reg CF, I must have my minimum low enough that anybody can participate. So traditionally, it's below $2,200. So it allows, I want to invest I can't come in and do a Reg CF and say my minimum's $5,000 because that defeats the whole purpose of democratizing capital and letting anybody participate. The other side of that coin is that ability for investors to dip their toe in. And I've seen that a lot. Somebody said, I really like this new flying widget idea that they're building because it's going to revolutionize something, but they're a small company. They've got intellectual property. Maybe I just want to put $500 in. Remember, it's 12 months that I can raise. If they're communicating with those investors, which is I'm going to ask you guys about, milestones during your raise and keeping the investor informed, the ability for that investor to go, you know what? And I've seen it where they go, I'm going to reinvest now because they're progressing. They're executing on what they want. I mitigated my risk, but I'm still on board for more. So CF lets you do that. The due diligence on a Reg D is like you say, I know I might be talking to the CFO. We're going to spend a lot of time and we're going to understand where their business projections might be taking them. So I'm doing my raise on a CF. What am I doing from a marketing perspective to communicate change, for example? Or do you?
I think that company updates are huge. Transparency with the investors as things go well and also as things go awry, I think is huge. Being able, in putting yourself in the investor's shoes, being able to get that inside look, getting updates as to what your money's going towards, things that are developing within the company. All of those things are great to update not only all individuals that have already invested, but also prospective investors. Being able to get those updates, see what's new, see what's developing, I think is huge in continuing to nurture that audience and ultimately getting that compounding effect of investors and that crowd of investors coming in.
Absolutely. If the portal updates, as we call them, the company updates, Jagger's saying, showcase something new, exciting, momentum each week. Hey, look at this new partnership we put together. We have another anchor investor. Here's a testimonial on why they participated. We were just featured on this podcast. We're going to be at this conference next week. Look at this financial email newsletter talk about us. Look at this press release we put out. It begins to give off that feeling that, hey, this is a moving ship and it's going to its goals with or without me. As Peter mentioned, I'm starting to get a fear of missing out now as an investor, and I'm far more likely to participate. And again, the flip side, the contrast of getting to an offering page and it's always the same. There's no news, there's nothing going on. Maybe you're searching around doing your due diligence, and retail investors certainly know how to Google. They do this. They see the social media pages, nothing new. Can't even tell there's a fundraise going on. It's just a different experience. And let's not forget, your target audiences are being targeted by your competitors. That could be your competitors as a business. It could also be the top Reg CF campaigns, the top Reg A plus campaigns that are advertising aggressively. And the moment that an investor clicks on an ad, let's say it's yours, they're going to be targeted by other Reg CF campaigns, other Reg A plus campaigns. It's just part of the algorithm that Meta's built, Google, other ad platforms. So if they're going to those issuers' social pages and seeing all types of activity, if they get to the offering page and see the company updates, talking about awards that they won and all different types of acknowledgments and accolades, which deal are they going to gravitate to more? Which offering seems more stable? And this is private equity, early stage in many cases. It's high risk, high return perhaps when it hits, but high risk. So you want to make sure you're communicating all of the right things to demonstrate that your business is moving, it's growing, and it is better than those other opportunities.
So not to scare anybody, because this is early in the crowdfunding arena. So you might have a small bucket of people that are saying, I get this, I can invest in all these companies, which is, the gestation. We're seeing significant growth in companies raising capital. So yeah, I guess there's a bit of a competitive landscape, but really the majority of the public do not know that I can invest in small businesses, large businesses, companies under these regulations. So would you guys agree? I mean, we're some people say, are we in the first inning, or are we still building the stadium when it comes to crowdfunding? I think we're still building the stadium, because if I talk to 10 people, they don't know. They go, you mean I can invest in somebody? Not unlike, when companies started doing e-commerce back in the day, man, for me to build a website e-commerce wise cost me a couple $100,000. Now people can do that on their weekend. 14-year-old build an e-commerce website. We're definitely in the early stages, because anybody can invest in something they believe in, but you got to get your message out, and you have to get it out in a truthful, honest, effective manner. So I agree with what you guys are saying, but I think it's that early. Like, I don't think it's competitive for the early guys, but there's such an audience that's just unaware. Would you agree?
Completely agree. It's a term that I see used a lot of time, really, since CF came out and Jobs Act in 2012, is the democratization of investing, right? And the point that I make here is that it's only democratization if people know that it's a democracy, if they know that they have their voice to be able to invest. So if 50% of the nation or of the world doesn't know that they do have a voice, aka the ability to invest, well, then it really isn't the democratization yet. We're still building that stadium for everybody to come play, to start the first inning, right? And so I completely agree with you, Peter. We're in the early stages. I think that implementation of different technology is going to be very interesting to watch how that plays out. I know we have had conversations about different technology implementations there. But yes, all in all, I would definitely say that we're early into this.
We're going to come back to that point on changes in technology, social media platforms, what's working, what's not working, because it's an evolution. It's always changing, no different than marketing anything on the internet. We have this beautiful vehicle called the internet, but the landscape on how we navigate getting our offering, or getting, in this case, our offerings in front of people, is changing. Before that, I want to, because we're talking about the process, I just want to jump on something from an investor perspective and what the broker-dealer's role is here. Again, fortunately, our broker-dealer was unable to attend due to a bad timing situation. So when an investor, people ask me, they go, well, why do we need a broker-dealer? What does a broker-dealer do in this case? Well, early on, we said there's two ways you can invest in a CF. I can go to a funding platform, where I've got a list of a variety of offerings, and they're on that funding platform. I'm going to make an investment. In that environment, you're not using a broker dealer. The licensed registered funding platform registered with FINRA, they allow investors to invest, and they're monitoring those investors so that they're compliant. When you do a direct offering, a broker dealer allows you to actually, they kind of own that page when your offering is live. In fact, they do. They lock down that page, that URL. You create your offering. The broker dealer makes sure that it's compliant. The invest button goes on. The marketing folks are going, we're ready to go. This offering goes live. The tech companies put the invest tech on to facilitate everything that needs to be done from a compliance perspective. So what does that mean to an investor? This isn't quite the same as when I go to Amazon and say, I'm going to buy my new shoes. It's an application, and there's a series of steps that an investor has to go through, or technology goes through on behalf of the investor, and the broker dealer vets it. And those steps are this. So an investor makes an investment, and there's a pending period. And that pending period simply means something in the background is going to occur to do what's called compliance. And that compliance is going to do an ID verification, anti-money laundering check, and a suitability. If I told you I want to invest $50,000, but I also told you I make $10,000 a year, I haven't met my suitability requirement. So I'm kind of red flagged. I'm in a holding pattern. So that's a pending process. But the investors are communicated with technology platforms. I got an email, say, hey, Peter, you just invested in ABC company and you're sitting in pending. There's an error. Broker dealers are doing outreach to those investors to help inform that investor that something needs to be changed, either your income verification change, or maybe your ID or your address, something didn't match up. So that's where a broker dealer really comes into play here. They're vetting those investors, and they're extremely experienced on things like, okay, now I'm looking at investor suitability, and maybe the investor made a mistake with fat fingers, or maybe the investor didn't understand that he's accredited based on his income level, but he didn't check off the right box or something. So all of these things have to be done before that application is processed. Then the application is processed, and the broker dealer says, I'm closing these investors. Funds can now come out of escrow, because when I make an investment, it just doesn't go into my bank account. It goes into an escrow account, a third-party bank account, because the investors in a Reg CF, and we'll talk about the different regulations, they're going to be notified 48 hours before the close that they could change their mind. And throughout this process, they're going to be receiving different emails that are regulated in such a way that the investor has to be notified of what's going on. So they might change their mind, so funds are in escrow. It doesn't mean they're going to change their mind, but they have the right to do so. It's a little bit different than just returning something that I didn't like in my purchase. I'm notifying the investors. We're dealing with securities here. So that's where the key component for the broker. And if one of our brokers were here today, they'd say, hey, we do a lot more than we might not be raising the capital, but we're doing a lot to make sure that we protect the issuer and the investor. Funding platforms do the same thing, where they have lots of offerings, except the funding platform is performing the compliance, is what we're talking about here, on behalf of the issuer and the investor, to ensure that offering is transacted in a compliant manner, both for ID verification and, again, suitability. So I just wanted to touch on that from during the raise, because now we're jumping in during the raise. We talked about the pre-raise. The other things the broker does pre-raise, however, is they're going to look at that offering page before those keys are released. Reg CF and Reg A have different requirements as to what you need to put on the page. Just a simple example would be, on a Reg CF, I need a Q&A section, okay, for my investors. On a Reg A, I don't necessarily need it, but the broker is going to make sure that particular page has what it needs, or the funding platform, a little more templatized. They're going to make sure that the information that's there meets all the requirements under those particular regulatory exemptions. So just really, really important important to know. Somebody asked me a question here on the side. I'm just looking at, is KoreConX a broker dealer or a CF platform? Really, really interesting question. Hey, Marty, how are you?
Good.
Sorry, welcome aboard. We have our legal beagle here, so you can address some of these questions. Question on KoreConX. No, KoreConX is neither a broker dealer or a funding platform. KoreConX builds funding platforms. KoreConX is a technology platform that brings together all the intermediaries, and we have dozens of broker dealers that use our compliance platform to facilitate what we just talked about, KYC and ID verification and anti-money laundering with our technology. So we're the facilitator. We're a technology platform at KoreConX, and whether you want to build a funding platform, whether you want to do direct offering, we just make that process so that Jagger can do his job, Marty can do his job, and make sure that the right documentation got to the broker dealers and got to the issuers so that we can put onto the offering page. So that's kind of where KoreConX fits in from that question. And Marty, we're looking at, we're talking earlier about pre-raise and the requirements for an issuers to come on board. Even before the web pages go up, the marketing teams are indicating to say, hey, there's lots of things that they do in preparation. They ask the issuers a lot of questions. You do the legal, CFs, Reg A's and Reg D's, and you're vetting those issuers and preparing them, most importantly, so that they meet their regulatory obligations from the filing perspective. I'm going to turn this over to you from a pre-raise perspective. What are you doing as a lawyer? What are the law firms doing?
So there's a lot that kind of happens in the pre-raise, and it really depends on what type of offering we're dealing with. With all of these offerings, you can do what is called testing the waters and going out and seeing what interest there might be. So we're reviewing any testing the water materials. We're also, and that each offering kind of has different rules on what you can say and when you can say it. So we are making sure that people are being compliant and in their communications. We're also, if it's a reg like a 506C, making sure that the communication that they're targeting accredited investors and preparing for accredited investor only raise. So with a Reg CF and Reg A, you've got offering documents that are being prepared and getting ready to be filed with the SEC. So that's the other things that we're assisting with and helping with in sort of the pre-raise stage.
So the offering documents, we've got a Form C, and the differences between a Form C and what my requirements are from a filing versus a Reg A. To you, Marty?
Yeah, so with a Reg A, you file what's called a Form 1A. It's and you file that with the SEC. It's similar to an offering. It's similar to a registration statement, and that's filed with the SEC, and that is reviewed by the SEC. With a Reg CF, you file a Form C with the SEC. That is not reviewed by the SEC. So once that's filed, you're in a Reg CF. Once the Form C is filed, you're ready to commence the offering immediately.
So quicker, faster, lower cost, simpler, lower raise amounts, still regulated from a perspective on what's required in that Form C submission, and it's made available to the public. I think that's one of the key things, even for the marketing teams. It's on your offering page, right?
Correct.
So, legal question. I'm glad you jumped in here. So this is good timing. So, someone on a 506C. Are securities freely tradable between accredited investors without restriction? That's kind of a yes or no answer, isn't it, Marty?
It is. So they are not. And Patrick, who's an attorney and colleague, answered this in the chat as well. That the 506, the the securities that are sold in a Reg D offering are restricted securities, and cannot be transferred or traded except in reliance upon an exemption. Most people rely on Rule 144, so you have to have, there's a waiting period for non-affiliates at 6 months, and then they can be transferred. Usually that requires an opinion, a legal opinion to transfer those shares. That's a little bit different than the shares you would get in a Reg A, which are unrestricted and are freely tradable.
And freely transferable the moment I purchase them, which isn't uncommon. When I see people go, how often does that happen? So as a transfer agent as well, we see it happen more frequently than I had anticipated, whereby granddad buys a bunch of shares in a particular company and decides at Christmas time, I want to transfer to family members. Is a real good case in point. Technology helps facilitate that, to make it really fast and easy and simple and not onerous on the issuers who might have large volumes of shareholders. So the Reg A is transferable, but back to the Reg D side of it, it's also depending on what's in the contract, right? They're arguably potentially tradable or transferable after 12 months, but I could have a hold period in that contract that says you can't trade these shares for 20 years.
And a lot of times you'll see that either under a shareholders agreement or under the operating agreement that says that the shares can't be transferred without the approval of the board of directors or without the manager. Sometimes they're subject to lockup periods where it says, hey, you won't transfer these, like you said, for 20 years, or a lot of times there's a lockup period that's put in place, that says after, if there's a registration that comes into play, that you'll hold them for 18 months. So there's some contractual restrictions that could come into play as well.
Yeah, so the exemptions themselves, especially with the Reg D, as you say, the contractual restrictions is what's critical to look at. Reg CF, it's a 12-month hold period, but they are transferable after 12 months. Do you know about any Reg CFs that have any contractual restrictions? I'm not aware of that. Maybe you can shed some light there, Marty.
Yeah, so you'll see it a lot in, like, if somebody's selling limited liability interests or actually selling equity, you'll see it in like the operating agreement or in a shareholders agreement. A lot of Reg CFs use a safe, and so theoretically those safes could be transferred. I'm not, the more appropriate question is, are you aware of any people that are, trying to sell their Reg CF securities after 12 months? And I maybe you would see that more as a transfer agent, but to me that doesn't seem like it's happening a lot. Just because, one of the things we can talk about these restrictions that are there, but the bigger issue is without an active like secondary market, which is kind of the big missing piece to all of the crowdfunding space. You theoretically can transfer them and trade them, but that doesn't mean it's easy. I think the only thing you're seeing is like private transfers or sales.
No, and that's definitely what we see. It's that ability to private transfers or sales. Secondary markets, that's more on the post raise, which we'll touch base because we talked about the pre-raise, during the raise, and the post. Yeah, I mean, you need a buy-sell side. We see it in marketplaces. We're seeing an appetite for more of it, but you have to have a big enough buyer community that's interested in either lots of product that you might have in the case of real estate, art, different collectibles, for example. Yeah, I think it's going to happen. It's definitely going to come, but it's definitely in the early stages when we talk about secondary trading. The ATS has worked, the technology is there, but if I don't have a buyer on the other side, it's somewhat moot. Thank you on that from that legal side. So when we're doing an offering, and this is all more to the marketing folks here, when I'm doing a Reg A or I'm doing a Reg CF, okay, there's certain requirements, and they vary a little bit on what you can do from a marketing perspective. Maybe Jagger and Jason, you guys want to weigh in on what you're seeing in the marketing and recognize that the regulations, they they change. I mean, it's a fluid, dynamic thing, and specialists need to, or issuers need to hire specialists that are aware of what's changing in the market. So a CF today, you made a comment on testing the waters. What can I do and what can I not do?
Yeah, so it's pretty much everything that you would typically expect from any type of marketing for any type of investment opportunity, right? So no explicit guarantees, no promising everything and completely undelivering or not delivering. You can't be putting any details of guaranteed returns or anything of that nature up online. One major thing that we do here at Valiant to mitigate any issues with compliance is to never launch anything online. No graphic, copy, video, anything online without an attorney's explicit approval. That removes any issues once things go live, and we're able to just kind of dive head in once the campaign is launched. And so really just the typical things to stay away from that you would expect.
So a lot of it's a common sense approach up to a point. If you're at all unsure, get an opinion. Would that be fair?
Exactly. Yes.
Jason, you've done lots of raises. From your experience when it comes to, what have you seen? Maybe you've worked on it. We've all had experiences where, geez, maybe the issuer didn't intend to do something, but they kind of stretched it. What's some things that you say, guys, don't do this, that you may have seen?
Let me give a specific list of names and violations. No, it's like Jagger said. You want to make sure everything's approved by legal. And as you were mentioning there, Peter, there are differentiators between Reg CF and Reg A Plus in terms of what needs to be added to the messaging, what channels you could use. Even there's some limitations for broadcast, as an example. But for us, Reg A basically means more scale, more magnitude. So as you're going into the planning and talking about this with legal, also trying to determine what is going to get investors' attention, what is going to communicate that you are in a high growth stage. Those announcements, as we talked about for company updates, need to be that much more substantial for a Reg A campaign. And to warrant $75 million in some cases. Other companies are offering less, but that is obviously what's available. So making sure that you have all of this crafted, you're not just dipping your toe in the water to see, hey, if I put this up, are people going to invest? I mean, you're putting a lot of effort, a lot of time, money into your filing, into folks like Marty and other groups that are working on your filing of every piece along the way. So you want to make sure it's all done correctly, and it's all done to succeed. Have an understanding exactly of where you're going to get the traffic to really bring to life the amount of investors that you need. Do not play around with messaging. That is on the gray side. Don't look to hire non-broker dealers for success fees and tell them it's going to be okay. Don't look to do things that could come back to you in a very negative way later. And as Jagger mentioned, as small or insignificant as a post or ad may seem, make sure to get it approved. I have seen that occur where a notice from legal comes in later that, hey, this ad was not approved. This messaging does not allow for an extension of your campaign. It puts a closing date in, and that could actually shift the plan and what you can anticipate from that last phase of fear of missing out as you're marketing to people during the closing.
Okay, so again, it's communication and putting your team together to address the right questions. I want to jump into post-raise a little bit here. And so the SEC, they're always making changes to the exemptions, and there's various types of ongoing reporting that are required. I don't know if anyone on the panel, Marty, perhaps you, from a reporting perspective, I'm doing a Reg A. What do I need to do in the future from a general reporting standpoint?
So once you file a Reg A, it's kind of they call it like a registration light. So or mini IPO, because you're not a fully reporting company unless you apply to be so, but you do have some regular reports that are due. You have an annual report called a Form 1SA, and then you have a Form 1K, which is sorry, you have an annual report, which is 1K, and a semi-annual, which is a Form 1 essay. You also, if there's material changes to the offering, if there's material changes to the company, such as change in officers, directors, etc., you have to file what's called a Form 1U, which is like similar to an 8K. So you're not having to do full Exchange Act, 34 Act reports, but you're doing, modified reports on a less regular basis.
So proper record keeping at the end of the day is really, really key. And I think, I know we've had discussions with firms. Well, we know we've had discussions with lots of firms because they go, oh, geez, I need some report right now at the end of I'm going into a year end, whether they've done a CF or a Reg A, and I need some information. So just to our audience out there, I always like to refer it to as organized data and organized information, and the tools from companies that provide transfer agent services, the Carters, computer shares, the core transfers, all of them, it helps you organize all your record keeping at the end of the day, so that when you're updating your information later or when it's called upon, it just makes your life easier. Again, it's the tax analogy of I got a shoebox of receipts. Well, at least I got a shoebox of receipts, but it's a whole lot easier if somebody's entering in that data up front on early on, and then your life's easy for any of these reporting. So, but there is some reporting requirements, everybody. So I hear sometimes they go, I don't have to worry about that. I'm just worried about raising money. But you do want to be concerned about it to the extent that just have things organized and just be aware that you have to do some reporting. The vehicles to raise capital are just amazing, but do the rest of it so that you're not penalized down the road by not doing some proper reporting, due diligence, etc. From a legal, Marty, what do you find sometimes that you would kind of heads up to the audience when it says make sure, or are there any good takeaways for issuers to say, just try to avoid these, some common sense things outside of the advertising from either preparation or filing?
So I think that, when we are engaged to do, and each one of them is a little different, but when we're engaged to do a Reg A, we've got a checklist, we've got a questionnaire that we have it. And the more prepared an issuer is with financials and business plans and all of that, the easier it is. I think from a warning perspective, the biggest area where people get into trouble is with what they communicate. So I think Jagger said it great that, if they're posting anything online, I know Jason would agree with this as well, that, have it reviewed, because there's just things that you can say, misstatements. There's, we have something we put together about kind of the do's and don'ts of communications, and a lot of people kind of make some mistakes even in their advertising and testing the waters. The other thing is just going into it with eyes wide open, knowing it's, it is an endeavor. A lot of times people think, hey, this is, we just got to get this filed and we're off the races, but it's hard, and marketing, legal is just a small part of it. I think it's ultimately it's a marketing exercise, and so you've got to be prepared to really engage guys like Jagger and Jason to help with that, because our part's kind of the easy part, I think.
Wow, I've never heard that before. The legal is the easy part. So no, respectfully, you guys, look, every offering is different, and there was a really good commentary that somebody just made on CF. Even knowing what exemptions you're going to use, talk to your legal counsel. Like the comment is, hey, I can do an SPV and a CF, on a portal or a direct issuance, a special purpose vehicle, and I've got, but I can't use it on a Reg A, for example. So what happens when I'm doing a CF and I've got a class of shareholders that actually they invested in an SPV, and then I'm doing a Reg A and I'm issuing common stock over here? Those two classes of shareholders aren't the same anymore, because one invested in the SPV, the other one invested in the company. So do you see anything, Marty, with that? Like, or just be thoughtful about it up front? Don't just
Yeah,
jump in.
be thoughtful about it. I mean, that SPV could have bought common shares, and so and then if you go out and do a Reg A and you sell common shares, theoretically, I mean, they indirectly own common shares, so they indirectly own the same class. But that those issuers in that SPV, the investors in the SPV have different rights than the Reg A. I mean, they have restricted stock, and it's also in this SPV. They can't, that's going to be more difficult if there does develop a secondary market. They can't participate in that.
So there's
some drawbacks. I know there's some attorneys out there that are just really against using SPVs for Reg CF. I can see pros and cons.
And I see the same thing. I think it's know what you're trying to do up front. I see good benefits in some instances, but I've also seen people come, they go, I thought I invested in the company. No, you invested in the SPV over here, and now the company's doing another raise over here. And to be quite honest, they just didn't understand it, up front. So there's, even for the investor, there's a difference between investing in an SPV and investing in a debt or equity as a common holder. Question here: can an issuer sell two classes of interest, i.e., Class A and B, with different terms and preferences in the same Reg CF offering?
I've never seen that. I was just about to respond to Patrick and say yes, but what I've seen is like units where they get like, one class of share, one common share, and then maybe a debt or a warrant or something like that. But different classes of interests, I don't know. Off the top of my head, I don't think so. I think you would have to have two separate Reg CF offerings.
I've seen, we touched on this earlier on the panel. I see it more in the case of I'm doing a CF and I'm doing a Reg D on the side. There's my Reg Ds doing my different classes. And that's more the traditional do two side-by-side offerings with dramatically, not significant term differences. So, but yeah, it's a good question. I've never seen it. I don't know how you would do it. That's why I think that's why you incentivize the investors that way. Like on a Reg CF, you're saying, hey, invest up to $5, if you invest more than $1,000, you're going to get bonus shares or warrants or perks or something. Invest even more. So you can do that with things like bonus shares, not necessarily class of shares, but there's other ways I think to incentivize that are maybe more effective. Jason, marketing wise, what's your favorite in that way? On incentives, bonus shares, timing.
Jagger was mentioning some different perks that we've seen to be effective. Early bird shares, absolutely, because we want to be able to point at how much has been raised. And I know some offering pages do not, but I've found, particularly when things are moving, it can be a very strong selling tool. So over 100K raise says something, and many campaigns never even hit that milestone when you look at the King's Crowd metrics. Anything underneath it that's listed can work against your campaign. It's hard to say you're going to disrupt an industry and only showcase that much raise. 250, 5 billion, 2 million, over 2 million raised from over 2,000 investors. We could use that in advertising messaging. So if we're stimulating that with early bird shares and having those type discounts in early, that's something we're always a fan of. Okay,
well, thank you for that. So we're at the top of the hour, and I appreciate everybody's time here, and I certainly appreciate our audience's questions. KoreSummits, we hope this was educational today. Everything we do is to try to be educational. It's a journey, and it's a team, and marketing firms and the lawyers and putting together your team just makes it that much easier. We see there's more and more companies raising capital. There's more and more companies, most importantly, successfully raising capital. And we all learn together as far as what best practices are in the future and going forward. And that comes right to, we talk about pre-raise, during raise, and post-raise. And the pre-raise is the preparation. The lawyers, starts with the lawyers. It also starts with the marketing firms for that pre-raise. And I don't think a lot of people sometimes think we're too linear. It's I'm going to do my lawyer, then I'm going to do my marketing, then I'm going to do my tech. You should be looking at, I think, more holistically. So you're planning everything in unison. And that way you won't miss any pieces to the puzzle and hopefully have a successful raise. So Jason, Jagger, Marty, I really appreciate jumping in on the panel as always. Until the next KoreSummit educational series. Yeah, this is always great. I always learn something new, and they're always great questions to the audience. I'm just going, the CF2 class one today. I'm going, I haven't seen that. So I'm not quite sure why, but I think the sidecar might answer that question for that one. So gentlemen, thank you very much, and have a great week. And as we go into, I guess it's into December, may everybody have a terrific year end. So thank you so much.
Thanks, Peter. Jagger, Marty.
Of course.
Feel free to reach out.